Hello everyone, this is my first YouTube video, and I'm going to be playing Speculator. I played this game a few times. I'm not super great at it, but I feel like we can make this into a nice little series and call it the $1 Billionaire Challenge. Where what we're going to do is we're going to start off with a $100,000 inheritance, and we're going to grow it up to $1 billion, hopefully, or a bit more than $1 billion. The highest I made was 100 million. So I feel like I'm pretty okay at this game. But there is different scenarios, and the developer of this game is Roinsoft Inc. I heard about them when I googled them. It's a pretty good game. I honestly like it. It's pretty good, especially if you're interested in investing in individual stocks, bonds. There's even index fund. No, there's no index funds. There's mutual funds - ETFs. And there's a lot of other things that you can buy, like options, where you can do puts and calls, and many other things. So I feel like this game is very in-depth. And they also have the other game, which is called Wall Street Raider. And I really like that game too. I'm actually way better at that game than this game, because this game is pretty new to me. I just picked it up during December of 2019. I was like, this game looks pretty cool. It's made by the exact same developer as Wall Street Raider. So I really like this game. This game's pretty helpful. I like the Wall Street Raider too. I'm way more better at it. So we're going to get started with 10 people. And with one AI, we're going to use the Canadian dollar because I'm a Canadian. Going to use a bunch of things. Gucci Gang is a joke, just in case. And we're going to start off with 128k, and we're going to have 30 years to grow it. So what we're going to do is just quick disclaimer, none of this is financial advice at all, because I just feel like I'm going to be trying to provide some value in my own investment thesis. So I feel like it'll be very, very helpful for anyone out there. But please don't take it just take it at face value. Take it for entertainment purposes only, because yeah, I just don't want to get in trouble lawsuit wise, you know? So this is how I'm gonna play the game. So this is my own theories. What I recommend is putting on the streaming quotes in the commodities. It can really paint you a picture of what is good and what is bad in the environment that you're in. So right now, prime rate is really, really low, and the long bond rate is low, and the short bond, you can see like the history. There's not much history of it, but you can see that oil is at a decent level. Silver is pretty decent, and wheat is near the high level, I believe. I don't really know because I don't have the price patterns at the moment, but GDP is decent. These really, really help though, because and you can also do industry growth, and you can do projections. Like this is the defense. This is what the game recommends you buy. I don't know if it'll be a good buy or not. We're going to have to go through industry growth rates. But first, I'm going to look at the economic data. So the Bank of Canada is going to be easing. So that means that they're going to lower the prime rate. And the long bond and the short bond will fall with that. So money's cheap. So banks are going to get hurt in real life, but in this game, turns out banks do better when there's lower interest rate environments. Yep. So we're going to look for my criteria. So we're going to use the recall, just as a brief explanation. So I like the min and max of that because I like to go for growth early on. But I feel like it would be a good idea to try out a conservative investment approach towards this game. So what we're going to do is we're actually going to look at the industry growth rates. We're going to pick one speculative industry, and we're going to pick mainly like some safe ones, like U.S. gas and electric, and I'm going to probably go for a 50-50 bunch. So we're going to hold 50% of our portfolio in cash, and the other 50% in stocks, just to make sure we're nice and conservative when it comes to our investments. And if there's a good deal, we use the other 50% towards, just the other 50% towards picking up stocks when they're nice and low or when I see a decent opportunity. So I'm going to pick up some shares of some U.S. gas and electrics. Projections, 4%. It's pretty consistent. It typically stays at that range. It barely ever hits negative. Projected return on capital assets. This is actually pretty important. If it's in the negative, I would actually say that's a big, big red flag when it comes to this game. This is my opinion. So projection market share, I don't really care too much about that. The lower the better, in my opinion, because it means there's more room for growth. Planned capacity for growth. So this is them buying up more assets towards growing up their operations. Negative means they're selling off their assets. Positive means they're growing. Percent spent on R&D. This is very, very important when it comes to the competency of the management. The higher the competency, the better they are. So I really like that. So we got our view profile. So this is VEP. Just get the name. So then this is like a bunch of industry data and stuff. That's pretty helpful. VEP. You can see the earnings report. They have no earnings. So that's a little bit of a red flag in my opinion. But yeah, you can see the list of portfolio, like how many stocks they own. The credit info, they are at BBB, so they're investment grade, but they're almost near the junk rating. So that's a bit of a red flag, in my opinion. Not financial advice. But I'm probably going to start looking for some A's. So this industry looks decent, but I'll probably pick up some FLA. Hopefully they pay a dividend. That'll be pretty nice. They have some nice assets. They have some decent debt. Good equity. Price to book value isn't that bad. Like if you look at the net worth and the current, it's about 50% above the book, which kind of sucks, but I'm not going to complain. This company is actually pretty decent, in my opinion. Price to earnings, 27 times. That could be better. I would like it if it's lower. Higher, the worse. Dividend yield, that's decent. I'm going to be making a bit more than a savings account nowadays. And many other things, it's A, they actually do pay a dividend of 21 cents a share. I think this is worth a buy. And it's a hold from analysts, reasonably competent, and they're going to make 19 cents this quarter. No prior earnings. I am actually going to pick up some shares. So I was going to pop out my calculator. Because this game is very, very math intense. Because it's kind of like when you're in real life, if you're buying shares. So I'm going to pick up some FOA. Oh, okay. Sadly, I cannot buy it at the moment because I have to wait until January 15th until my account gets cleared for no criminal background history. Awesome. So what we're going to do is we have some cash to spend. $128,000. It's conducted in USD, so I have the exchange rate of 1.28. So we're going to pick up some FOA. It's rated hold, A grade, 1.4 dividend. And what we're going to do is I'm going to look at the ask price. It'll be $14.44, which is pretty decent. But I'm honestly, what I'm going to do is I'm going to look at my budget. So I'm going to probably hold like 50%. So 128 divided by 2, 64. We're going to pick up $64,000 of this stock. 64,000 divided by the ask of 14.44. We're going to pick up 4,400 shares. It's actually 32, but I'm just going to pick up that. Yeah, that'll look good. So we picked up some shares. Now, if you look at our account, we have almost exactly 50-50 right now. So I'm going to do that. And once the prime rate starts to hit around 8 or 10, then that's when I'm going to go into some long bonds or some short bonds. Sometimes the short rate is higher than the long rate, but most of the time the long rate is bigger than the short rate. That's at least me playing WSR, Wall Street Raider. So these games kind of interchange, like they both work together. So like it's pretty helpful to play WSR, in my opinion, first, because that game seems to be a little bit easier, because this game is just more for real life, where you have less control of your companies. So you can't just say, oh, I would like to do this. No, the companies control themselves. So you gotta really research them a lot harder. So we're holding the stock, and the prime rate is at all-time lows. I should have picked up some long bonds and could have sold them for a capital gain, but it's no problem. So we're actually going to fill this, and we're just going to watch this company, because I think they're reporting earnings soon. It says earnings on March, and it's February, so we got a bit of time before. Yep. So we're not going to make much money off of this 64K. Like, if you look at this, you can see the annual cash flow. Our interest on our cash balance is $304. Like, we're making not much off 60 grand. That's a yearly, I believe. And here's the annual dividend income, and we see our projected. I could take out some debt and go really heavy right now because the prime rate is really low. I could theoretically, but I can't take out margin at the moment. You see your net worth chart. I'm kind of flat right now. Oh, it raises its dividend and reports quarterly earnings. That is good news, in my opinion. So we just made some bank. We made $265 Canadian. So like if you see this, like first quarter income per share of 22 cents versus 13 same quarter. So basically they're growing. They increased that by 22 cents versus 13, my bad. The company utilized R&D, not super duper important, but like this is somewhat important. And you can see whether or not they had cash flow difficulties. They did not experience any cash flow difficulties, and they're prepaying their loans. That's good. And a 6-cent dividend. Awesome. I think that's quarterly? Yeah, it's quarterly. So that's good news. Yeah, this is another company that I don't own. So we have we're a bit unbalanced at the moment. But that's not much of a concern in my opinion. So we have 140,000 right now. We're just going to play like the first year. I'm just trying out this for YouTube and stuff. Because I'm just trying to implement some of my knowledge that I've learned in school and stuff towards this game. So we're at 8K. We made a decent profit. It's pretty good. Probably it's going to hold it. Unless analysts predict, there's not much happening with this company. Like then again, it's in utilities, so utilities typically do nothing. Utilities typically have a steady income base because you need to pay your hydro every month. You don't pay your power, they cut it off, and you basically need power. So our stock has fallen a bunch. I should have sold it, but it's all good. It's been a buy. Still 50% price to book, but if you look at their earnings in the past, they're growing their earnings. So 2017, they had a bit of a slip up in 2018, 2019, but they're starting to have a comeback in 2020. That's some good news. So hopefully they keep growing their earnings over the long term, and this company will be worth more. That's one of the most important factors is EPS, but it's pretty hard to predict. $265, not bad. Beat the estimate, that is amazing news. And they basically just hit the same as last quarter, I believe. And so everything's going pretty decent with this company. I actually might want to buy up some more shares of this company. Because I feel like it's really cheap because it's fallen down a bunch. Its book value, I believe, grew. So that's some good news. 13 cents, that's just for the first quarter, second quarter. So they actually might beat it. Price to earnings is a lot higher than it was, so that's bad news, I guess. But I'm actually gonna pick up some shares in this company. We're gonna pick up $500. We're basically gonna reinvest dividends back into FLA. I feel like that would be a decent idea. So we're gonna get in the ask at $13.33. We're gonna pick up 37 shares of this company. Plus a $10 commission, which is pretty garbage, but it's kind of like what we have in Canada. Good idea, Reed. Yeah, good idea. So yeah, I'm not super good at doing commentary when it comes to YouTube and stuff because I'm pretty new. Like this is my first time actually doing commentary when it comes to stuff.